Hi, I'm Peter Akerley, Chief Executive Officer, President of Erdene Resource Development, listed on the Toronto Stock Exchange and the Mongolian Stock Exchange. We're a company that's been focused for the past 20 years on precious and base metal opportunities in Mongolia. We saw the opportunity to explore one of the world's great gold belts, the Central Asian Orogenic Belt, and discovered what we think is one of the best new high-grade open-pittable gold districts on the planet. We are now into construction of that first mine, the Bayan Khundii project, and we expect many more to follow.
Peter, good to see you. Good to meet you over here. Normally we're talking by Zoom.
Yeah, that's right. Yeah, a long ways away.
A long ways away. Anyway, here at PDAC, lots of pounding the street, shaking hands. In fact, when I went to meet with you, we got accosted by two different groups, didn't we? We barely made it back.
That's right.
I want to kind of catch up on where you're at. You talk about, just starting construction and also, finance partner and all the rest of it. But give me a sense of the mood over at the conference, because gold specifically is at a tough old time,
Sure.
right? And I think explorers are finding it hard to raise capital. You're a advanced development story. What's the interest levels? I mean, are you trying to attract anyone else into this story?
Well, I think the interest level, obviously, over the last few days has been quite positive, given the backdrop of the very high gold price increase we've seen since Friday. That's certainly buoyed the prices and the enthusiasm in the audience here. I'd say the crowd is more vibrant. There's a larger crowd than I experienced here last year. Going to some of the investor conferences around the edges of the show, we've seen good interest. I think for us specifically, given that we are now in construction of a high-grade open-pit gold mine, it's attracted probably more than some of the other companies in our industry. There is still a fairly high or low tolerance for risk in our business. So to see us going down that track with a substantial partner and having the funding in place to build this gold mine has put us in a bit of a different category. So yeah, it's been quite a positive experience. In addition to all of that, we brought our Mongolian partners to Toronto for this event. So we have the 4 senior executives of Mongolian Mining Corporation, whom we're introducing to investors. And just as a side note to that, their share price has quadrupled on the Hong Kong Stock Exchange in the last year. So they're in a very strong financial position. They're producing, I think, about $1 billion in revenue this year. And they're planning to deploy the profits that they're making into the metals business, diversifying away from coke and coal. So our shareholders, the investor audience that we're talking to, is hearing that story as well. So that's added to the positivity around our company and our projects today and over the last few days.
Right. I want to kind of get into the kind of strategy and the history of why we're at where we're at now, because there's a little bit of foresight required for that. But kind of sticking with the partner and the deal, for new people looking, and I know we talked about it last time, for new people, talk about the kind of construct of that partnership, what it entails financially and obligations.
Sure. So, over 2 years ago, we recognized we'd made a decision to go ahead with the development of the Bayan Khundii project. We were looking around, hired a group out of London to assist us in finding the financing partners for that. And we entered into discussions with Mongolian Mining Corp in September of 22, announced in 23 that they were coming in with a $40 million equity injection to take a 50% interest in our gold subsidiary. So a 50-50 joint venture strategic alliance. But over top of that, what we structured was a 5% NSR on an area of interest.
Wow.
So when you look at the economics of that, it'll equate to roughly a 60-40 net profit split if you take our 50% and
Can they buy that back off you?
No.
No, so that's fixed. And when you say area of specific interest, what's that mean?
Yeah, so we have 3 exploration licenses that include 2 mining licenses and an exploration license in the deal. But we've carved out an area around that of 700 square kilometers, which we see as the most prospective for this type of discovery, which we've called the area of interest. So any properties we acquire in that area of interest will be subject to that 5% NSR, which for us was really the key to the deal, because I see this initial discovery where we're building the Bayan Khundii mine is the first of many. We have 4 deposits we've discovered in this area. 3 of those 4 are at surface, and the 4th is 80 meters below surface. I mean, they're shallow at surface discoveries. What's going to happen when we deploy much more aggressive exploration funding? I think there's a number of new discoveries, and I think this will be a multi-mine, multi-commodity district that we will be sitting there with a 5% NSR over.
Okay, well let's talk about phase 1, which is your decision to think about getting into production early, right?
Yeah.
So a lot of companies coming and talking to me today about thinking about doing that. They've looked around and gone, life's tough. Maybe we need to, it'd be in a less efficient way, get into production now and hopefully grow it later. You must have made that call a while ago.
Yeah, I'd say we made that decision shortly after coming up with the initial resource, because it's very rare to find in our business an at surface, in this case, 500,000 ounce deposit at some of the highest grades of any mine being constructed today, 4 gram per ton head grade. Great metallurgy, just nothing really stood out as a complication to developing this open pit. And we're looking at that and saying you're not often going to get that opportunity to get to cash flow rapidly. Mongolia has a history actually of being able to take projects from feasibility through to permitting and construct in a fairly rapid time relative to the rest of the world. So we took that in consideration and looked at the market. And as you've experienced, finding equity capital without massive dilution over the last several years has been a real chore. And you can destroy shareholder value and hope you're going to continue to add and add and add, or you can stop that and get the cash flow and use that cash flow to create the value we think is here, which is much more than we see in our share price today. For us, it was a logical, practical decision. It's hard because many investors want you to keep chasing the elephant. Well, the elephant's still there, and I think we've preserved value if you look back 3 years ago and what's happened with the market. So, yeah, a combination of factors led us to this decision.
And let's just try and understand the thinking around the economics, right? Because most, the traditional way, we need 2 million ounces, we need minimum 10 years life of mine, we need a margin of, pick a number, $1,000, right? Those are the big boy banking types would say that's what they're looking for. Here, because the phased approach, it's smaller, it's open pit, it's higher grade, it's at surface, there's a lot going for it, but it may be less efficient than sort of planning out the whole, you talk about 4 different potential targets and pits. Why did it make more sense for you? I understand the kind of economic backdrop, but why does it make sense to do it that way?
As opposed to waiting to double the resources and move forward. Yeah. Well, let's take Bayan Khundii, for example. We spent $20 million to find it, drill it, put it into a feasibility study, get it all packaged up, ready for development. If you just replicate that, that's 20 million on what was a 60 million market cap company. So you're going to take another 25, 30% dilution without the certainty that you're going to get there. We had the certainty that we could put together the package and the partner and get it financed and get it started. So for us, it was just a less risky way to move forward and preserve value, I think, for our shareholders as we move forward.
Right. 50-50 of what?
So 50-50 of the 3 licenses, the 2 mining
Right.
licenses, and anything we find in that area of interest. We excluded outside of that area of interest our Zuun Mod molybdenum copper project. So effectively, and just to qualify that, the 5% NSR kicks in at 400,000 ounces. But at that point, as I say, the economics to me is 60-40. If you take a 50% joint venture ownership, that 5% NSR is effectively a 10% NPI.
Yeah.
So 60-40 is the economics.
And it will effectively, then we're talking net numbers here.
Yeah.
Right, okay. Who's operating?
So we have a subsidiary that is 50-50, unanimous decisions needed on all material decisions made on that.
Yeah.
But effectively, we're going to do what we're good at, which is the exploration, and they're going to do what they're good
Gotcha.
at, which is to operate, mine, construct. Now they're a coal mining company. There's not a lot of experience in a CIP plant operation or in gold mining. So we've brought in a number of expat consultants who are assisting us in business readiness, operational readiness, who have operated gold plants, operated gold mines and gold companies in the past.
Okay, so it gives us a sense of the economics here, because I want to understand what 50% represents,
Sure.
and more importantly, what you do with it. Okay, in terms of this phased approach and expansion through drilling deeper, drilling in more places, etc.
So economics, there's an average of 87,000 ounces per year that'll come out beginning in year 2. I think we're 60,000 in the first full year of production. That 87,000 will stay pretty much steady state through year 6, at which time we've exhausted what's in reserves today, 500,000 ounces. But that pipeline is full of 3 other projects, some of which have not established resources yet. But we have another 700,000 ounces of gold at about 2 grams per ton between Dark Horse, Ulan, and Altan Nar, and a tremendous amount of exploration to do. So we don't see any issue in extending mine life. The question is going to be, can we put together the volumes to look at an expansion, effectively replicate that plant and double it up and have 150,000 ounces of gold. We also have Altan Nar, which I think is better suited to a concentrate production sold into China. So I see that more likely as a second development that comes on down the pipe. Coming back to the economics on Bayan Khundii, we're looking at $100 million capex. 55 million of that is an EPC contract, so largely fixed. The remainder is in plant equipment, and 94% of that is now final and on its way. So, we're not going to see a whole lot of variation from that 100 million, which includes a 12% contingency. The all-in sustaining costs in the feasibility, 869. Use 900 as a number to sort of use for economics, but we'll generate about $80 million in after-tax cash flow unlevered at $2,000 gold. So today we've probably added another $12 million a year at today's gold price. So that would be split 50-50. The partners haven't finalized what we do with that money yet. Obviously, we'll be paying off any of the debt that we've established at that point, but we do have a shared vision of continuing to build out this district, and a significant portion of that will go into Altan Nar, some of the other gold projects in the vicinity. There'll certainly be an intent to move some of that into dividends in the future, and we'll work through those details as we get a little closer to that point.
Okay, so just trying to understand, MMC, as you said, big company, big profits, but they're moving away from coking and they want to kind of get into this business. Do they know what they're doing? Do you know what I mean? It's a big call, right?
Yeah. Do they know what they're doing in terms of being in the precious and base metal space? Well, this company is Mongolia's largest conglomerate. They produce probably 10% of the country's GDP. They're across all elements of business.
Okay.
Their construction company is the largest Mongolian company working for Rio Tinto. They have parent companies 10% owned by New York Fund. They're very sophisticated business people, Hong Kong listing. They have been watching the Oyu Tolgoi. Their businesses have been involved in the copper business in Mongolia, and have, over the last several years, studied which commodities they want to be in, so copper, gold.
Well, I guess my point is, have they done gold before? Have they done gold in ore bodies like yours? Because, you're an exploration guy, right? You know how hard it is to make discoveries, find the stuff, and then you got to work out how do you get those ounces out of the ground most efficiently. So who are they leaning on?
Sure, yeah, so a couple of things there. I guess the first instance is just mining. We're going to move 8 million tons of rock on an annual basis. They're the best miners in the country. They have 2,000 people
of what,
employed.
coal?
Of coal, yeah.
Right.
So much of that 6 million tons, though, is bulk earth moving. How
Yeah.
cheaply can you do it? Then you get into the actual mining of the ore. This is not like your typical narrow vein. This is 50 to 100 meter wide gold zone, so it's more bulk than it is selective. So I don't really see an issue there. But having said that, we're employing 3 expats, one with O2 Mining, who have long expertise, long history working with high-grade gold mines. So they'll be our consultants to make sure that bulk mining coming from UHG mining is trained in the more selective side of it. From a process plant perspective, MMC has an interest, or the parent company MCS, in a gold mine in northwestern Mongolia. It's called the Bayan Ereg mine. You might remember years ago that QGX, a Toronto-listed company, was taken out for $300 million by the Shangri-La family, the Kwok family. The MCS group has an interest in that, so they do have exposure through that, and we've actually had our people up there starting to be trained at that site, and that's a heap leach type operation, so they are seeing that expertise. The Boru mine, which Centerra had in the country, had a number of people that we now employ as well, so we're putting together the team with the experience necessary to operate this.
Okay. Next, in terms of that relationship, because it's quite important, right? Given who they are, as you've been describing, is to kind of move through the next phases, you're still going to need to, well, do you think you'll need to raise money, or are you going to be doing it off of your share of the net profits? Because I'm thinking of their balance sheet, right? You know, one, it gives you access to a lot of Mongolian institutions. Would they be there for you, or do you need to stand on your own? Can they back you up?
So, you know, they've demonstrated that they're there for us at this point. We have 40 million of equity that's come in. We have 80 million of debt that they've committed to. That gives us 120 million on 100 million capex. Now, when you add in pre-completion costs and interest and some exploration dollars, we'll move through that 120. And there will be, let's say before we get to first gold, there's another 10 or 15 million dollars, split 50-50. So would we need more money? Yeah, to the tune of 8 to 10 million dollars before first gold.
Type of money?
How would we source that money?
Yeah.
Yet to be determined. They may very well be willing to put up additional debt,
Right.
but also we have two commercial banks in Mongolia that have put up, had credit approval for up to $30 million. We have European Bank as our second largest
EBRD,
shareholder
yeah.
after Eric Sprott, who are very active in Mongolia, and I think they're another source of monies. You know, I don't think we have to worry about equity at this point, but who knows, if we needed to look at that in 2025 as we're moving to first gold, we might consider it, but I don't think there's any shortage of options for us, and I think the confidence that shareholders have in us gives us the ability to source that in that route if we decide at that point we want to.
Right. Okay. And what's the ambition here?
Well, the ambition and the vision, I mean, I've been in Mongolia for 27 years. I've never seen the opportunity to explore one of the world's great gold belts with so little exploration having been completed. We've found 5 deposits with a relatively low budget, and I am firmly of the belief that there's going to be a multi-mine, multi-commodity district here. And for us to look back 10 years from now and see Bayan Khundii expanded, Altan Nar coming on stream, Zuun Mod moving into the production phase, and whatever success we can have in exploration, I think that's a very realistic vision that can be now captured with the partnership that we have, and they share that vision. You know, they're doing things now like bringing in overhead transmission line from China to bring power to the Bayan Khundii project. They're not doing that for the Bayan Khundii project. They're doing that to provide a much better cost of power for the long life development of this district. They have the construction company, they have the transport and logistics, they have the power company who can do things like bring in Chinese power, much like Oyu Tolgoi did. So we have the makings now of all of the pieces we need to actually turn southwestern Mongolia into an industrial center for Mongolia, which we couldn't have hoped to be a part of without this partner. And if we can construct this right, we're sitting there with a 60% portion of the profits from those operations coming into our shareholders' hands. Yeah, there's maybe some minor dilution along the way if we need to take some equity, but it's extremely minor compared to what the prize is here.
Well, yeah, you released the Kraken here a little bit.
Oh, absolutely.
In the sense that even if there's a little bit more equity to be done, it gets you into production, which gets you cash flowing, share buyback, dividends, or however you choose to play it. But more importantly, be able to start talking about delivering scale to this thing. Yep. So do you think that's enough to get people interested in this story?
I look at our shareholder base today. We've attracted a number of U.S. institutions, probably 5 U.S. institutions have come in just in the last 24 months. You know, we have a great retail base here in Canada. We have Eric Sprott, EBRD. We're seeing that already. You know, they share that vision. You just look at the probabilities based on what we've done to date that there will be a lot more coming here. And, you know, who knows if there's a multi-million ounce discovery made. We'll see. You know, the truth will be at the end of the drill bit, as we often hear. But the probabilities are very high. We're going to have some pretty exciting results as we move forward. You look back at 2021 when we last did significant exploration, we discovered both Dark Horse and Ulaan. You know, one's a blind top discovery under 80 meters, but Dark Horse, you know, 5 meters of 128 grams within shovel distance from surface, just spectacular. You know, they truly are grades in all 3 of those deposits, Dark Horse, Ulaan, and Bayan Khundii, that people would be excited about in Ontario or South Africa at 1 kilometer or 2 kilometers depth. And here we are at surface. Yeah, it's spectacular. Really.
I think the setup sounds good to me, but I want you to kind of focus on the get this thing built. I understand the upside.
Yeah.
I understand the ease of the upside if you keep doing what you have done in the past. So I appreciate you coming in, Peter.
Thank you.
But let you get back out there and tell that story and get back with the Mongolian delegation.
Appreciate it. Yeah, no,
they must be super pleased.
That's where we're off to now. Yeah, no, they're very excited to be a part of this as well.